Hello and welcome back. So today I have a good one. It's actually investing in REITs, and I actually have one of the best REITs you can invest in. It's basically a way to invest in real estate without actually putting up a ton of money. You can do it through the stock market. So stay tuned. I'm going to show you what the best REIT is, I think, right now. Of course, you want to do your own research, but if you want to learn more, stay tuned and we'll go dive into it. So anyways, the company is actually Realty Income Company, so it's actually named pretty straightforward, and the stock symbol is just a straight O, just like that, O, and you want to type that in. It's a great way with a REIT to actually invest in real estate without actually investing in physical real estate. And I'm going to go ahead and show you a lot about what this company does and the returns that you can expect and things like that, so stay tuned. Alright, so first off, the stock is about $73, and basically it has about a 3.7% dividend as we speak. So keep in mind that this can change if you're watching this a year from now or something. It's going to definitely change. But that means that at 3.7% a year continuous dividend, and you divide that by 12, and you're going to get that every, 3.7 divided by 12, whatever that number is. You get that each month, so you get paid out each month, so you get that recurring income monthly. This is also a commercial property, basically REIT, so it basically invests in a lot of major companies that you would know of. It leases the property to them. Alright, so now I'm going to go ahead and dive into some of the details of this REIT and show you a lot about it, and you guys then can make your own assumptions. Alright, so just really quickly so everyone knows what they're investing in, what is a REIT? So basically a REIT is a real estate investment trust, are companies that own or finance income producing real estate in a range of property sectors. These companies have to meet a number of requirements to qualify as REITs. That's important. So if you go down to the very bottom down here, I'm just going to go through this very quickly for everyone, but they have to invest at least 75% of its total assets in real estate, derive at least 75% of their gross income from rents and real estate property, interest on mortgage, financing real estate property, or sales from real estate. They have to pay at least 90% of its taxable income in the form of shareholder dividends, which is the key kicker here. So that's where you get these high dividends from. It has to be taxable as a corporation, be managed by a board of directors, not just a single person, have a minimum of at least 100 shareholders, and have no more than 50% of its shares held by 5 or fewer individuals. So just keep that in mind. That's pretty straight for what a REIT is. Now let's dive into the REIT that we're talking about right here. This is going to be, again, it's the stock symbol of 0, and it's Realty Income Company. So that's basically the name of the actual stock, Realty Income Company, stock symbol 0. And again, you can see just by the way that their website looks, they invest in Walmart, some Coca-Cola, businesses that are very, obviously common, things that are very recognizable, things that have been around for many, many, many years. 7-Eleven, you can see. As we look about the company here, it does have some really impressive stats, and I'm going to go through them. 5,700 plus properties under long-term agreements with them, so it's not just a couple. Like sometimes REITs have only like 5 or 6. 5,700, and they're all big club, Sam's Club, Home Depot. You just saw a couple of the other ones. So keep that in mind that these are big companies, Taco Bell, companies like that. They're actually leasing them the property. Now for the meat and potatoes of this, why is this such a good investment? Let's go ahead and look at the numbers here. And you can actually get this online. I'm just going to kind of go through it really quickly. It's basically a $26 billion enterprise, so it's a very, very large REIT that you can invest in. It's got 262 commercial tenants. It's in 48 different industries. Again, it's got 5,700 properties, so that's very, very straightforward. It's been going on since 1969. That's a long-term stock. Again, that's pretty straightforward as well. Things that are really, really, if we get down to here, this is actually really impressive. So the compound average annual total shareholder return was 16.3% a year. Now think about that for a second. It beats basically stock markets and stuff for around 9, S&P 500 9.3%. This is around 16%. That's actually with its return on its investment plus its dividend that it gives you back. So it's about 3 to 4% dividend, 3.7% actual right now, and then you get the growth of the stock, and so it's had a massive track record around 16%. If you go down, this is the thing that I want to show everyone here. This is what I always look for, and I'm going to go ahead and show you this. This is 1994 over here. This is going to be 2018. So let me go ahead and pull open Google here, and we're going to type in O stock, and we're going to get to this stock. I always like to do this test. I always show people this. I'm going to go max this out. Here we go, Realty Income Corporation. Let me go ahead and zoom in on this really quickly so people can see it. But basically, if you look all the way back here, 1994, look at this stock now. Basically, even in 2008, it did drop. It dropped from about, 23 down to 16, which is a lot less than a lot of the other companies did. So you can see the stability there. That's one test I always run. How stable was it during one of the worst recessions we had in a while? And then look at this growth since the 2008, dip. We obviously had a dip here at the end of 2018, and then it came straight up here. 3.7% dividend here, but I always run this test and see basically the longevity or how it's done over time and during some bad times, and then I can make my long-term assessment of the stock. It's not everything, it's just a quick way of doing it. It's just my way of doing it. I mean, there's about 10 other things I do, so don't take this as the only thing you should look at, but it's just one method I can use to see if a stock's any good. But that's pretty impressive. Look at that. So I come back here and this shows the exact same thing here. This is going to be showing you in the let me see here. So basically, over this 1994 to 2018, the S&P 500 did 754% increase, and realty income basically 3,695% increase in the stock price or the actual investment. So it beat it by leaps and bounds. So it's really a strong contender there. And again, you can see the growth of the company here as well, as far as the how much it's worth. And let's go back. We don't have a lot of time here, so let's go back into here. Here's the portfolio. This is actually going to be really good to look at. So Walgreens is at 6.3% of its portfolio, 7-Eleven 5.5, FedEx 4.8, Dollar General 3.9, LA Fitness 3.7, Walmart 2.8, Circle K 2.3. As you go down the list, these are all recognizable names like Rite Aid, Home Depot, and it makes up, their actual tenants that they lease to. So these are very, obviously reliable tenants, and it's a, less risky REIT compared to some of the other ones. And it shows you some of the top 20 tenants that they have, obviously, and they're all things that you would recognize. And then it says exposure to what industry and things like that, and dining, health and fitness, convenience stores, drug stores, childcare, convenience stores. So basically, it'll you can obviously go in here and take a look at some of this information and just see what if it works out for you as far as what you think is going to be good in the next 10 years. And anyway, so I just wanted to go through that really quickly and show you what this is all about, what it is that you're investing in. You're really just investing in real estate. You're buying real estate through a stock, basically, and hoping they do a good job. But you can see from 1994 on, it's been phenomenal. So take everything with a grain of salt when you're investing. Do your own research, but you got to look at the past to at least have a chance to predict the future. All right, so basically, I don't, as I always say, I never recommend a stock. Everyone's in a different situation in life, and sometimes you just can't do something someone else can. If you're getting old, you're 65 or 66, and you don't have a lot of money, I wouldn't, put things in the stock market, depending on what your risk is. So you just want to take those types of things into account when you're dealing with stocks and stuff. I'm just showing you guys what's out there, what's available, letting you do your own research after I talk to you. Is it a stock that I think is good? Yes. I mean, who knows what it's going to do in the future? I always look at the past, and I kind of showed you why I think it's going to be something that might be good maybe in the future. But again, you just never know. So just, obviously do your own research. All right, anyways, if you guys can support me, I'm just kind of doing a lot of these videos, obviously in my free time. I think I have like 60 or 80 subscribers. I want to get up to the 1,000 mark if I can. Anyways, if you can support me in any way, just hit the like button and the subscribe. It's going to help me out for sure. Thanks again. I'll try to make more of these. I also do tech videos, which is more like Mac related and things like that. Also, tech reviews in general, sometimes PC. So watch all my videos, and I will talk to you guys next week. See ya.